I'll do this one. It's David Papier, who is the head of sales trading at ETX Capital. We're all waiting for this Greek Eurozone standoff to come to some sort of fruition. David, thanks for joining us. What's the latest? Because the euro just weakening somewhat, 113.70.
Yeah, absolutely. The euro has been weakened, and I think it's due to a lot of salient fighting points that are coming out of today's Greek meeting. You know, sort of the main topics of discussion here are to sharp reforms and shake off the mismanagement of the past. You know, they need to find common ground on debt financing, management financing, privatisation, and also labour reform. But I also think there's some key trade-offs here that need to be considered. You know, Greece needs to be kept in the eurozone. They need to fully respect their creditors, and they need to take into account a programme which is actually backed by the Greek voters. You know, I don't think they're looking for a way out of paying their debt. They're more looking for a few months of stability to try and bring back growth to the country.
David, it's Nozipo in Johannesburg. Let's just maybe potentially look at that six-month proposal. What could be realistically achieved in a 6-month period? Perhaps break down to us the significance of the request that Greece has put on the table.
Do you know, it's a very good question. I think what is the significance of 6 months? And, you know, this could be a number that the Prime Minister or a date that the Prime Minister just pulled out of the air, frankly. You know, a bridging programme, you know, may be put in place, you know, whilst a lot of new debt relief, or whilst a new debt relief deal is agreed to reduce the existing bailout. However, you know, any new financing programme, you know, may require parliamentary approval from several different countries, including Germany. And I think the question on everyone's lips is how long is that going to take? You know, the ECB are unhappy that their ideas are being questioned, you know, and this could cause further can kicking down the road. So 6 months is, it seems like a figure that may have just been plucked out of the air.
David, they can't pay back the money on the current terms of the deal, the so-called deal. They won't be able to pay back on any new deal that might be structured. To me, I mean, it sounds sort of facile, but they're going to leave the Eurozone, aren't they? The question is now surely how the Eurozone and Greece manages the exit of the first country from the Eurozone, which is a lovely experiment, but there are certain countries that shouldn't be there, and in many people's eyes, and to many people's logic, shouldn't be there, and they won't be there.
Well, again, I think that's a very good question. I think if the meeting produces no results, then there is fresh possibility that Greece could head into a credit crunch and an exit from the Eurozone. You know, don't get me wrong, this may be better for the Greek people, but not necessarily the economy, the Greek economy or the European economy. And I think what is interesting about this is that Mario Draghi refuses to acknowledge, you know, Greece leaving the Eurozone. And also that the ECB is unlikely to pull the plug on Greek banks for the moment, as long as the terms of a future debt payback programme are under discussion. Because let's face it, if Greece leaves the Eurozone, then this is going to open the floodgates for the rest of, you know, the weaker economies to leave as well. So people like Portugal, people like Italy. And let's face it, I think Germany doesn't want the Eurozone to break up, because if they do, they go back to the mark and all of a sudden their exports become incredibly uncompetitive. So, you know, yes, there is the fresh possibility that they may go back into a credit crunch, but leaving of the Eurozone, I think that may be a long way down the road, if at all it happens, which could be doubtful.
And of course, David, when the Syriza government first came into power a couple of weeks ago, they were very clear that they had no intentions of leaving the Eurozone and that they were open to communication. Do you get a sense that that political rhetoric has changed at all?
That's a very interesting question as well, because you know the new government were very, very staunch on their approach towards the austerity package, and one of the things that the ECB wanted the government to do was rely on the package that was put in place by the previous government, and they don't want to do that. However, you know, the ECB has allowed emergency funding from the Greek Central Bank, but at a much higher rate. And the thing is, I don't think the Greek new Prime Minister or government are going to accept, you know, anything that smacks of an extension to the bailout. Or a continued role for the Troika. You know, the new PM would have a hard time explaining this to the people that have voted him into power.
David, the the real danger here is not the first danger is the way that the potential Grexit is managed. But what about if there is a Grexit, no matter how well managed? What about Ireland? What about Portugal? What about Italy? What about Spain? If there's some sort of concession granted to Greece, then they're all going to put their hands up and say, oh no, wait a second, we'd like a little bit of that, please. And then the whole thing becomes chaotic, and chaotic for markets.
I completely agree with you. It will become chaotic for the markets because, let's face it, if Greece does leave the Eurozone, it opens the floodgates for the rest of the smaller economies in Europe. And let's face it, the ECB and also Germany, this is going to be the last thing they want. You know, as I mentioned earlier, if the Eurozone does break up and Germany has to go back to the mark, this is going to make their exports incredibly uncompetitive. And is that going to be good for Germany as a whole? I don't think so. You know, we saw it in the past with Angela Merkel trying to keep the euro together. She's now trying to keep the Eurozone together. And I think it's within their interest to be able to do that. You know, Germany and France are the people powering the Eurozone at the moment. They can't have a breakup. It would cause absolute chaos in the markets, and I doubt very much that's going to happen anytime soon.
David, should the European house of cards come tumbling down, is there anyone who could stand to benefit from this, who can stand head and shoulders and say this is a win-win situation for them?
No, I think if the house of cards come down, I don't think there are going to be many benefactors or people benefiting from this. Yeah, you know, exports can become more competitive. You know, if they do go back to you know, their original countries' currencies, you know, for example, like the drachma, the lira, the peseta, you know, it's going to be great for people that want to import from these countries, but then, you know, what have they really got to offer the world? You know, if the house of cards does come tumbling down, this is going to be bad for, you know, global markets in general. This is not just a European-wide problem.
Final question, David. It's a nice, easy one for you. Euro-dollar currently merrily bowling along at 113.75. Was around about 111 not so long ago. Has been as high as 140 in the last year. Is it a free hit, as many people say to me? It's so easy. It's going to parity against the US dollar. Is it that easy, even without the Grexit?
Well, again, you know, it's a very strong argument that the Grexit's not going to happen for what we've discussed previously. But if you look at euro-dollar itself, yes, the euro is weakening, and let's face it, the dollar is strengthening. You know, and if we see continued good data coming out of the States that's showing the economy's growing, that the labour market's improving over there, that people are spending more, the dollar's only going to get stronger, which is only going to further compound the weakness for the euro. So the question on everyone's lips: are we going to see parity? I think if the eurozone keeps weakening and the dollar keeps strengthening in the way that it has been, this could be a very, very interesting situation to see parity for euro-dollar.
David, it's always lovely having you on the show. A big thank you to David Papier. He is the head of sales trading at ETX Capital, joining us there from